So it's been a choppy last sort of 24, 36 hours for financial markets. Bit of a risk-off day on Tuesday. Markets just gyrating around the latest US-China trade headlines. Bit of a sell-off into the close on cooking oil, of all things. Yes, that's just about as random as it sounds. But sentiment firmer this morning after some decent earnings from ASML, the technology firm in the Netherlands, which has steadied the ship somewhat. I think, frankly, the sort of choppy, messy, indecisive price action that we've seen over the last day or so really speaks two things to me. One, it just reinforces what is now a long-standing view of mine that, frankly, intraday price action typically offers much more by way of noise and very, very little by way of signal. But it also just speaks to how sensitive markets remain to incoming news on the trade and the tariff front. Of course, the assumption remains that the threat of additional 100% tariffs from the US on China is just a negotiating ploy. It is a gambit to get to a deal quicker, but it is nonetheless a risk that market participants need to discount. Although we are all expecting this to be another taco moment, nobody wants to be the one who doesn't hedge what is probably the most obvious risk out there right now, and then ends up with the sort of proverbial egg on their face on the 1st of November if, in the very, very slim possibility it happens, those tariffs were indeed to go into effect. I think this, again, just sort of reflects how markets are going to trade for the time being. Very choppy, very indecisive. Levels of implied and realized vol are going to remain higher for longer, and conditions are going to remain choppy for the next couple of weeks. And I think this is really where participants need to sort of look through some of the intraday noise and adopt a little bit of a longer term view, because if we do take the base case that this is just a negotiating ploy, then the bull case for equities remains firmly intact, particularly with Fed Chair Powell doing nothing to dispel the chances of either an October or a December rate cut in his remarks yesterday. In turn, that run it hot strategy from the Fed should continue to boost the dollar, and it should also continue to boost precious metals like gold, which obviously benefit from the risk that inflation expectations may become unanchored. So I continue to view equity dips as buying opportunities, continue to see risks to the dollar and to precious metals as tilting firmly to the upside. But it's not going to be that one-way traffic that we've seen for the last 6 weeks or so. I think it is going to be a little bit of a bumpier ride until we obtain some clarity on the trade front.